All right, let's talk more about Tesla. Speaking about something where it looks like the sky is the limit. Tesla joining the S&P 500 today. Technically, it joined after the close on Friday, but starts trading as a member of the S&P 500 today. Let's bring in Wes Crill. He's vice president and senior researcher at Dimensional Fund Advisors, which of course holds Tesla in its various funds and ETFs. So, Wes, it seems like, there was this sort of action in advance as people made their positioning changes to put Tesla in. What happens now?
Yeah, thank you and good morning. Thanks for having me on. I think this is a great example that indices like the S&P 500 do periodically make changes to their list of constituents. For the S&P 500 in particular, there's been about 20 to 25 of these additions and deletions per year over the last number of years. And you alluded to what one of the implications is when, let's say, you have a stock that's added to the index. You have trillions of dollars that are tracking the S&P 500. So when that happens, when a new security is added to the list, then index fund managers who are tracking that index have to buy that stock. And you can see that very clearly there's potentially an implication for the prices at which they trade. It's not unlike around Valentine's Day where you have to go out and buy roses. Well, that's the most expensive time of year to buy roses. And just like many of us shopping for flowers lack the flexibility to replace it with something else, index fund managers have to buy that particular security in that particular amount. So that's a hidden cost potentially for investors if the index fund managers are buying at a higher price. And in many ways, it's arbitrary because they're buying that security based on what the index is telling them to do and not so much their own assessment of those security characteristics.
Wes, is part of your thesis on Tesla that they will in fact change the world?
Well, I think that with any individual stock, the expectations for what that company is going to do in the future are very well baked into market prices. And if the expectation for the market is that this company is going to continue to do well, then certainly you expect that company would have a high price. But we always like to say there's a difference between a great company and a great investment. When we look back historically at the performance of the largest stocks within the market, they typically had a meteoric rise in terms of their share prices as they went from smaller companies to very large companies. The real question for investors is, what do I expect going forward for investment performance? The largest stocks in the stock market have not tended to have the highest rates of return once they became very large. And that's why we believe it's so important for investors to have broadly diversified portfolios that use market prices and emphasize securities with higher expected returns to the extent that that's consistent with their goal, rather than trying to project what an individual company or sector or country is going to do going forward.
Well, so Wes, I'm curious if Tesla's kind of the action we're seeing around its inclusion in the S&P, are you kind of seeing this as a reason to not index to the S&P as closely because the index itself isn't exactly passive, or is that not exactly the way that investors should think about this?
I think it's a really good indication that it's important to have flexibility when you're designing and managing portfolios. If you think about the amount of trade volume that is getting soaked up within a security that's being added to the S&P 500, clearly that might have implications for the price of that security. Historically, on average, when a security is added or deleted from the S&P 500, the trade volume it experiences upon the effective date of that addition or deletion is about 25 times its normal trade volume. And so clearly it's important to have flexibility so that if you can buy that security maybe before or after and not on the day that the index is telling you to do, you can potentially get better price execution. And so I think that flexibility really lends itself to having a daily process to investing, where we believe that being able to decide every single day what you want to hold and when you want to hold it can result in more reliable outcomes. And that's clearly an area of improvement above and beyond what an index fund can potentially do.
Wes, thanks for being here. Wes Crill is vice president and senior researcher at Dimensional Fund Advisors. Appreciate it.